Hey guys, Jim here. I typically like to trade a particular type of strategy as well as certain stocks. Today I want to share with you one of my favorite stocks as well as my favorite strategy, which is the wheel strategy. This has probably been my best performing stock. I've been able to earn over $1,000 on a monthly basis. So I'll go into detail about the trades. I'll also share with you why I really like this stock and why it performs so well. So stay tuned. I think it's going to be well worth your while. Now, the stock I really like running the wheel on is Zoom. I've been trading Zoom for a number of years. I really enjoyed it in 21, 22. Then it seemed like the premium went away a bit in 24. So I stopped trading it for a while, but I'm back to trading it quite a bit. Over the last 4 months, I've been wheeling it, and it's worked out really well, better than any other stock that I'm currently wheeling. So what do I like to look at? They have really good earnings per share. Their PE is relatively low at 14. I also like to look at profitability. They have good profitability, good return on common equity, good return on total capital, return on total assets also looks good. Really good cash flow from operations. So pretty much everything I like to see. Profitability, growth. There's not much growth, but growth doesn't, not having a lot of growth isn't necessarily a bad thing, especially if you're running the wheel. If you're dealing with a company that has really high growth, it can shoot up and it's very difficult at times to run the wheel on it. You want something, a company that stays in a certain range, and Zoom typically does that. It seems like it stays between like 60 and 80, usually averaging or being pretty near 70 or 75, which again works really well with the wheel. So valuation, they have good valuation, not really that overpriced, but not way underpriced either. They have very little debt, only 64 million, with 7 billion in cash, which is really good. They're a cash generating machine. Earnings, they did beat earnings back in February. They typically always beat earnings. It's almost like their forecasting isn't very good. So they typically do a little bit better. And I think that'll probably continue. They're not, even with earnings, they're not growing like crazy, just pretty flat, but then they start growing again. They kind of stay about the same. They are adding more bells and whistles, but they steadily bring in some good income and they're improving their profitability. So they're not going to be a big growth play or, not necessarily a company you want to own long term. And then we can also look at options. And I like to go over to bar charts to look at options. So I like to look at the interactive chart, which this is the Bollinger Band. And currently their stock price is right here, almost right in the middle of the Bollinger Band. But if you trade a little bit lower, you're closer to the bottom of the band. Down here, a little bit lower, you can see RSI. So they're a little bit high. So it's not really showing that they have momentum where their price is going to go higher. They're going to kind of, from what this is showing, kind of stay pretty near where they are. And that's what you want to have happen. You want the stock to kind of go sideways. On occasion, maybe some assignment does occur, and I'll show you they were actually assigned to me. The last part of this video, I'm going to go over the trades. So I also like looking at that. I end up using bar charts quite a bit, and I'm an affiliate of both these, Seeking Alpha and bar charts. I use both of them. Details are in the description if you want to learn a little bit more. What I really like about bar charts is this over here. I can look at, highest implied volatility. I can look at IV rank. I can also look at, who's got the most activity or the most active options. Usually I have to come over here and put it on the main view so you can see right now Tesla, NVIDIA. A lot of times this list, if you have a free membership, you only see, I believe, the first 25 or 50. But if you have a premium membership like what I have, then you can see it. You can pretty much see almost every company out there that at least has options and you can trade options on. They also provide a screener that you can use. I end up using this quite a bit. So I will screen companies by debt to equity. I also look at return on equity. You can set filters. They have tons of filters. Like here, I've got what type of option, return on equity, debt to equity, overall option strength. So I use this quite a bit to find potential trades or potential stocks or ETFs. You can also set these to find ETFs as well. And then I also like this opinion strength where you could say, the top 1% of stocks or ETFs, or is it the max strong strength or good strength? And it works out pretty good. Then you can set the results and you can make changes. You can store it. You can give them different names. That's one of the main things I really like about them. I also like their main page where it'll tell you kind of what's going on. Stocks fall as weak economic reports sparks growth concerns. There's a lot of worry about stagflation. So we'll see. I do believe we will do well once a couple of these tariff deals are inked and we can actually see them. I think once one is set up, then we're probably going to see a number of others come shortly after. At least that's what I'm hoping. I'm hoping we're not dealing with this going into third and fourth quarter. I'm thinking probably the rest of this quarter, and then maybe by late summer, early fall, we'll be to the point where we're not really done with terrorists, but a lot of this not knowing, what Trump wants or what the goals are. I think it'll become a lot clearer. At least we can hope. So that's what I like about Zoom. I like the fundamentals, I like the technicals, and it's kind of the right type of stock for running the wheel. So next we'll actually jump into the trades, and I'll share with you what the trades have looked like the first 4 months of this year. So hold on, let's jump into that next. Okay, here's a spreadsheet I set up just for the Zoom trades. All I did was I went into Fidelity, and if you go into the activity order page, you can actually export your trade. So I exported the trades related to Zoom, and I started wheeling it back in January. So I just picked up all the trades for the last 4 months. I have traded Zoom before, but it had been a while. I had taken kind of a break from Zoom, or the premiums just didn't look good enough. But now they are. They actually look quite good. So I originally did this trade going back in January. So I opened it up in January 22nd and brought in 290. I did a 77.71. I like to do spreads in a lot of my wheel trades. I teach my members to purchase the long put if you can, especially if it's inexpensive. And here you can see I purchased it for 31.58. So in my mind, it was worth having that put, especially with having 3 contracts. You'll see in February, I did have 300 shares assigned to me, and you'll see why purchasing that put really made a big difference. So in February, I did a number of trades. I did one trade here, which that's the first trade of the month, and February 5th brought in 241. Then I did another trade on 219, again brought in 367. And then it was assigned to me. So 300 shares at $82, which was 24,600. I had the long put 3 contracts, and I sold them for 1257.93, which was a significant amount of money. It was almost $4 per share. Of course, 1257 divided by 300. So my cost basis was under 78. With the 57, it was I think like 77 and 80 cents or something along those lines. So just by having those puts, I was able to bring in quite a bit of income. And then when I started wheeling again, I sold the covered call initially on 3.4, brought in 375. I've been really impressed with the covered call premium with Zoom. It's even better than the put premium. So again, another reason you don't really need to worry about Zoom not growing a huge amount, especially if you own a couple hundred shares, because you can earn some significant call premium. This was for March 21st. It was made on 303. So it was about 20 days, 18 days DTE. And all of these were, I believe they were like 30 deltas. They weren't crazy high deltas. And then I did another one. I rolled in 312, and here you can see I brought in another 247. Then I did another trade and I kept rolling at 77. I would just stick to the same strike and I would just roll out another couple of weeks. So I went from April 4th to April 17th. Then I rolled again from April 17th to May 2nd, again, more like 2 weeks. And then another roll out to, I believe it was 5-2. Then I went a little bit farther. I rolled out to, actually, this was a bigger, two different ones. And the reason it's broken out here it was a partial trade, and that's something that most of the brokers are due. So I think one contract, um, yeah, it was one contract and then two contracts. So that's why it's really, even though these are showing as two different trades, they're really one trade. But overall, it brought in again 391. So the call premium's been really good. So if I come down and I look, I brought in 4,067 in premium, just rolling Zoom, boring old Zoom, which is 1,116 on a monthly. So you can see here 1,116 on just one stock, and then review stock and show how good it is for the wheel. So that's just me making a note to myself. So some notes related to wheeling it. Let's come down here. So current cost basis is 68.44. So I believe Zoom, let's go back and look at what price Zoom is. I believe I still have them up over here. 76.81. They had gotten up to, I think, 79, but they're right now it's 76.81. So another point of this is it's my cost basis is 68.44 with all the covered call premium that I've brought in. So if I sold it now, I've also had a pretty good return. Again, I'm forgetting what that was, 76.81. So we can kind of figure out, it's almost $8. So if I sold the 300 shares, I'd make another $8, you know, per share. So that'd be almost another, what, $2,400. So it would work out really well. Let's find where the spreadsheet is. And then a good covered call premium brings in an average of 955. So just doing the covered calls is bringing in 955 each month. So it's been surprising to me, but the call premium in a lot of cases has been better than the put premium. When assignment occurred, I had 1253 for the sale of the long puts. So again, one of the reasons why I like to buy the long puts. I like to own a lot of these shares. So right now I think I have 500 shares of Zoom, but I'm only using these 300 shares for running the wheel. So now with it, I believe it was up to almost 78, 79. So I believe I was in the money. I think the last one was 77. So I was looking to potentially roll it out again. Um, and I was looking to do that probably next week once I get into May. But I've been fairly happy with the ability to find good premium, find lots of open interest, and be able to roll. It's been fairly easy to roll. Just knowing you can go out at 1 or 2 weeks and you don't necessarily have to go out a month or two. So when I looked before this video, I believe I could roll up to 80 fairly easily and again bring in $300-400 in premium. If you have a smaller account, go with fewer contracts. So, a lot of the questions I get both from subscribers and members is, can I do this in my smaller account? I'm doing this with 3 contracts. You could definitely do this with one contract and earn around 300 or so dollars, like $330 or so. So if you have a $10,000 account, you could do, one of these. But again, if you're dealing with a spread, I'm not worrying about assignment. I continue to work. I don't manage these trades, but you could manage them. So Zoom would be a fairly good one, even if you were just doing vertical put credit spreads, again, because it typically doesn't move that much. It doesn't go that down that much during corrections, and it doesn't really go up that much, during bull markets. So it works out quite well. And I had mentioned my memberships. If you want to learn more, details will be in the description. I share these trades with my membership. I go into detail. I explain why I made the trade, what I like about it. If I'm rolling a trade, I also will suggest, what might be a good entry point, because a lot of times when you're rolling, you're not going with the best entry. You're dealing with the current position and trying to manage it in such a way that either to avoid assignment or to have assignment, but at a better price. A lot of times I always want the stock I'm trading with. That's one of my requirements. I don't trade in stocks that I'm not okay with owning, but all of us want the stocks to be cheaper or lower in price. So if I can, you know, take off a couple more dollars in the purchase of those shares, then long term I'll do even better. It's really hard to time the market just to hit the overall bottom, but by selling options, it gives you the ability to get fairly close to that. But again, you're rarely, if ever, going to hit the true bottom. So that's what I wanted to share with you guys. Wanted just to show you how one particular stock can make a huge difference. In what my next video that I'll probably do next week, I'm going to talk about all my different wheel strategies. One of my wheel strategies suffered a little bit more than the others, primarily because Zoom worked out really well with it. I believe Zoom was in the same wheel strategy or groups of stocks that I did, but I had one other, I think, that I had to close for a loss. I believe it was four, but because of the market correction, no two stocks are the same. And some of the other ones did not work as well with the wheel. So finding the right companies or ETFs for running the wheel is really, really critical. So let me know what you think. Leave a comment. I try to answer all my comments within 24 to 48 hours. I like to hear about people. Also, if you disagree with me, I also like to hear why, how you would do it potentially different. So as always, thank you for taking the time to watch the video. I look forward to seeing you next time.